Hello, Market Club members everywhere. Adam Hewson here, coming to you from the digital studios of Market Club. Wow, after yesterday, what can I say? We did give you the key levels to look at. We're looking at a chart of the Dow. This is the daily chart of the Dow. We said 16,016 level was a key level. That was hit. We're currently trading a little bit over that level right now. Don't get sucked in to think this is going to be a rally that you want to buy. It's not. We're going to see this market continue to move down. It was a classic pattern. We talked about this before. And that is the sharp move we had down here, then the sort of corrective move, the breakdown below right here, and now we're continuing down. All of our trade triangles you can see right now are negative, minus 90, negative, negative, negative. This is a sucker rally, and I would not be surprised to see the market either go maybe a little bit higher, a little bit lower, but nothing dramatic. Certainly not over yesterday's high. That's just not going to happen. Also below the RSI, 50 line, it just does not look good at the moment. Remember, bear markets are tough. They just don't let you out. They sort of pull you down, pull you down. Just remember that. So let's go on to our next market. We've got a lot to cover today. Same thing with the S&P 500. We gave you the level yesterday, 1908, and that's exactly what we've done. So we're currently trading below that level. Today's rally, don't get too excited about that. That's not going to change a thing. This is just a little bounce from these levels back here in the August period. So again, this market's going to go lower. I think it's going to go quite a bit lower than where we are right now. How you would measure this, you'd simply look at the move down from here. We'll call this level 2100, okay, down to the lows, and we'll call it 1880. Let's just say 1880 for now. That'll make it simple. So we simply add or subtract this number from 2100, and that will give us 220. Okay, so 220, so you take the measurement from here, the breakout, 220 from 1960, we'll call that 1960 just for discussion's sake. So 1960 subtracting 220, because that's the move from here to here, and that gives you, that's what we're looking for, 1740, 1750 on the downside in the S&P 500. So that'll give you an idea what the Dow will do as well. So let's clear that off the screen. Nasdaq's going to be pretty much the same picture. You can measure from the highs here. You can do this in your head, 5,100 down to 43. That's 800. The breakout was right around these levels here. Let's call that, well, let's just do it. It's simple, really easy to do. So we're looking at the move from here, 5,100 down to the lows, 4,300. 800 point difference. Okay, so the breakout was right around here on 4,800. I would say we're looking at on the downside, if you take 800 right here from 4,800, so we'll just do that, 4,800 minus 800 gives you 4,000. I would say that's going to be a target zone for the Nasdaq. Looking at the Eurodollar, basically the Eurodollar is sort of just going flat. We do have a plus 70. All of our trade triangles are green, indicating that the dollar should not do as well against this market as it's doing against other currencies. But generally speaking, it's sort of meandering along. I wouldn't really get excited about this until we were closing over the 114 level. So let's see how that plays out. Gold, the pullback actually is still, I think, positive in terms of gold. It's still above the 50 line. This should be support. It's acting as support. I would say this is probably a very low risk buy at this point in time because our weekly is up. And we are expecting this market to improve from current levels with our weekly trend being up. This is crude oil. Crude oil is just drifting along, hasn't gotten exciting. No one really knows what to do with it. We have all of our trade triangles red, indicating the trend is down. But it just seems like we've just had this big square box that just is really going nowhere. And I think that's the thing we have to look at for the moment. Okay, let's take a look at some of these stocks we're talking about. Here's Under Armour. Now, Under Armour looks pretty good, and I'll tell you the reason why. It has a weekly and a monthly up, so everything's intact. But even with this fallback today, it's still a positive for this stock. We're back down to support, so I would expect that the lows we've seen today, just below the 98 level, is probably going to be a low period for Under Armour. We're still thinking this is going to be the new Nike of the future, and Nike, as you know, reported earnings yesterday, very, very positive. I think this is going to be the new Nike of the future. They're Kevin Plank up in Baltimore is doing a great job at directing this company and really pushing it hard. So let's see how that plays out. So I think right around these levels, I think it would be a low risk buy. This is Amazon, the juggernaut of all kind of things, e-commerce. But look, we had a weekly yesterday. That's not a good sign for Amazon. And we're below the 50 line. Again, this is not necessarily a good sign. I think Amazon's going to have to regroup maybe for another few more weeks. And then we'll see how it plays out. But right now, I wouldn't be jumping in to buy Amazon. It's indicating a trading range. And that's the thing to look at right now. Netflix, we've always liked Netflix, but the reality is Netflix is in a negative mode right now. The longer term trend is still positive, but the short term timing method is not. From basically the 103.88 level, it kicked in saying the market's heading lower. So I think that's the negative we see right now. For the time being, I would just want to be on the sidelines, either waiting for this level here to turn green and also the RSI to go above the 50 line. I think that would be a good indication. So let's watch Netflix. I like this stock longer term, but I want to get the momentum on our sides. Next stock, Facebook. All red trade triangles below the 50 line. Not a buy. I think this is going to see some more sideways action before it improves from current levels. Last stock, Apple. Now Apple, you can see we've just been going sideways in Apple for a while. You can just see this, just sort of like this is the action. And we need to get this momentum on the upside. But the concern I have is right here. And that's a monthly. We should not have seen a monthly if this stock was so strong. They're selling so many iPhones. I mean, a record 13 million iPhones this past weekend on the launch of the new iPhone. Okay, great, but look at the stock. It's not, something is going on here that we don't know about yet, but the market knows. And I think we have to pay very close attention. Also, you're below the 50 line in the RSI. That should not be happening with a strong stock. But again, it's more of a trading range. You can see the 50. We have the mixed bag here with the weekly up and the monthly down. So it's more of a trading range as opposed to a position play right now. Hey, I'm Adam Hewson. I think we've covered all the stocks we want to cover today. Let's just do one quick check just to make sure we've got everything on board that we want. And that's just to go to our, yep, there we are. A quick way to look at the stocks, in my opinion, is just look, these are the indices. Negative, negative. Daily went up today? No, I don't think so. That's still negative. Eurodollar, positive. Gold, trend up on the weekly, down on the daily, out of the market. All negative for crude oil. This is the Under Armour, very positive. It's the only stock that we looked at today so far that has two green trade triangles. Watch that very carefully. Hey, I'm Adam Hewson. Thanks for taking the time to watch this video today. Every success. We've got some really interesting markets. Q4 is coming around in just a couple of days, and we'll have some great opportunities then. Thanks for watching.